All right, it's time to start our quarterly rendezvous with the management of TCS, and boy oh boy, when numbers came out yesterday, everyone on the street was excited that it's been an all-round growth, it's been a good quarter, and it's been a good start to the earnings season. So what is the way forward for FY19? To understand that, to dissect that, let's connect with the top brass. We've got Rajesh and NJ. Gentlemen, good morning. Thank you for joining us. It's been a good quarter of all-round performance, so congratulations on that. I was struggling to find fault lines as always. But before I talk about the quarter gone by, Rajesh, TCS is a $100 billion company. It happened after your last quarterly number. So what was your first reaction? $100 billion company. I'm sure you saw the news on ET Now. But when you saw on ET Now, how was the reaction?
Quite frankly, the reaction, oh wow. But yeah, it's in many ways a big milestone, huge milestone for us. I don't think we planned for it or even anticipated it, but we're happy where we are, and I'm happy with the trajectory that we see.
You know, I've been sharing this with my viewers that the growth what TCS has reported in last 2 quarters, it has silenced a lot of naysayers, a lot of doubters who were doubting about the change of guard. So for you personally also, it's been great, right? All the doubters now suddenly who raise question marks about the leadership change, now suddenly I don't find them.
Nikuj, but most of the doubt was actually about the strategy and about the company's choices. I think the leadership change happened quite smoothly, and as we had said, Chandra has become the chairman. It's not that he is dissociated from TCS. It's been a fairly seamless experience. I think the bigger questions were whether our strategy for organic talent development, organic growth, is that right? Are we being risk averse? Are we being hesitant? And in all of those, we have come out and shown that our strategy is right, and our ability to lead with our Business 4.0 framework to participate in the growth and transformation agenda. That's where the big validation is coming from. Personally, that's what gives me a lot of satisfaction.
You know, personally, what gives me a lot of satisfaction is that I've been tracking the TCS journey before it went public. And to see a company which you've tracked for the better part of your career now becoming a $100 billion company. So as member of press, it's very exciting for us to see an Indian company reach that mark. So for me, that really has been the ultimate motto. NG, I'm coming to you, with some pointed questions. But Rajesh, I was looking at your 8 verticals, and the quarterly growth has been between 3% to about 5.9%. This reminds me of a purple patch TCS had in FY15, when there was growth which was all-round growth.
Yeah.
Minimum was 3%, maximum was 6%. So am I true in assessing that?
Purple patch are not allowed to give it a couple of quarters, but yes, we are from where we see it. I think we are now in a good position. As we had said, there were always few areas of weakness. I think this year definitely we should see very broad-based growth.
And just whereas analysts will be fixated with 1% here, 1% there, that's how they'll arrive at the fair value for the stock. But in terms of in communication, based on what you've done for the last quarter and this quarter, which is equally important, double-digit growth is the new normal now for TCS.
Yeah, we always stated that we are, as a management team, we are extremely focused on getting back to double-digit growth. What has changed in the last about 3-4 quarters is really about our thought leadership framework on Business 4.0, which actually drives growth and transformation, number one. Second is that we are so fixated about driving business outcomes because of the end-to-end capabilities that we have built, leveraging a suite of digital technologies and offerings. I think that positions us well, and I think the results of Q1 sets us very nicely to give it a best shot at a double-digit growth.
So the kind of momentum what you've reported across verticals, is that momentum here to stay for FY19? Because Q1 is a good quarter, but will this translate into the second half also?
I think so, because we have a very strong deal booking. We have announced something like $4.9 billion of order bookings in Q1, and the deal pipeline looks good, and it is very, very broad-based. America is growing. It has grown by 3.7%. UK is firing all cylinders. Continental Europe is growing. Asia Pacific is growing. So, and across verticals we see opportunities, and they're all across the both traditional as well as digital services. And we are very actively participating in the growth and transformation programs. All this gives us the belief and confidence that it is sustainable, and No, as Rajesh said, that we have to give it another 1 or 2 quarters to actually conclude that we are in a purple patch.
You know, I was looking at a tape about a year ago when I was preparing for the interview last evening, and generally the sense which I got from the management a year ago was that this kind of an growth was ambitious. This kind of an growth was what TCS was targeting. Now it's real. So frankly, are you surprised with the market turnaround? And if the market is turning around for TCS, is this because market size is growing, or is this because you're gaining market share?
I wouldn't say we are surprised by it, because as you said last time also, said our target was to get to double digit. We inherently had a very strong confidence that this is doable, but of course, you know, the proof of a pudding is in the actual execution and the delivery of it, which is why we have been calling it, saying that we are seeing growth tick up and we are quite confident about getting back there. So that's one part of it, that we are not technically surprised. We are very pleased with where we see ourselves, but it has been something that we've been working towards diligently over the last almost couple of years, if it were. The other element of it is that where is this coming from?
Yeah.
It's not. It's a much more heterogeneous market now. It's not a very straightforward one that it's a head-to-head against a single one. We have a diverse set of competitors across various theaters, both from industry perspective, geography perspective, or service lines, and we have been consistently winning across. But the most important aspect of it is something we have discussed in the past with you also, which is the ability to stitch together composite deals, which cuts across all the way from core engineering to front-end interactive work. And that, I think we are uniquely positioned. We probably have the best portfolio of end-to-end services, and our clients are seeing a lot of value in having a single person be able to deal with the full portfolio.
We are spending a lot of time discussing quarterly numbers, but I also want to spend a minute, Rajesh, with you to understand the buyback policy. Second buyback is at play. So whatever regulation is allowing you, you are now committed to give money back to the shareholder. So is this the new TCS, that whenever regulations will allow you to, let's say, come up with a third buyback or the fourth buyback? I'm not so sure of the regulations here. I understand till the second buyback. But whatever the regulation will permit that, you would consider a buyback? Will that be an ongoing process?
So think about it as a capital allocation policy. What we had said, that 80 to 100% of our free cash flow we will be returning to shareholders, subject to any one-off big-time acquisition one. And overall, what we have found is that there are a diverse set of shareholders. Some prefer dividend, some prefer buyback. Broadly, what we have done is we have kept it as about 50-50. Sometimes 45-55, sometimes say, but approximately 50-50 as the two channels of it. If regulation allows, technically the buyback channel is constrained by the maximum cap put by the regulation. If regulations are more open-ended, then we will look for the most tax-friendly means of capital distribution. But otherwise, overall, the 80 to 100% band stays, and a mix of channels for capital distribution will be always a preferred way.
Yeah, so that's an important communication, and I don't want to get this one wrong, because if you're a shareholder, you would say, if buyback is going to be constant as per the regulatory approvals, that means I'm looking at a lot of cash coming back. I'm also looking at my return ratios improving, and that in a sense normally expands the P multiple of the stock. That's how markets value a company. So the communication from you is that whatever you are allowed to do in terms of giving cash back to the shareholders, you will do that.
Absolutely. In fact, I'm glad that you mentioned it. So yesterday we didn't call it out. If you look at all our capital return
questions,
ratios,
that's why.
it's all of them are looking very good. Yeah. Primarily coming from both an improvement on the top line, the numerator of the returns, as well as the denominator, which comes from the capital return policy.
And just, do you think the fact that TCS moved into the digital space first, it's more than one fourth of your total business, has been the differentiating factor for TCS? Because if I do the absolute comparison, you're growing. If I do the relative comparison on both the accounts, you're growing. Is this the digital strategy which is differentiating, and can you grow at this rate?
And I think so. I think one is that we got in first, number one. Second is we took a very basic call that we will grow the talent organically. We said that, look, the contextual knowledge that we have, our people have, cannot be ignored, and it is better to train them organically and then make them digitally savvy, and that will set ourselves nicely for the wave 2 of the digital transformation that is taking place, and where the digital core is in the main and all the other things are surrounding the digital core. So the cloudification, the APIification, I mean all of that, right? With the TCS Interactive on the front, it's a compelling, differentiating proposition in the marketplace. And I think, certainly that's a differentiator, and that sets us very nicely to participate in business outcomes driven transformation programs.
A couple of quarters ago, Rajesh, we would talk about volatility in India business, volatility in LATAM business. The word diligenta was missing in the press conference yesterday. BFSI vertical, yes and no. There was volatility in retail, but there is no mention of any blind spot. Is the business is the visibility absolutely crystal clear? Crystal clear is the word here.
Blind spots by definition are the ones that catch you when you're not looking at it. So again, as I said, from what we see, things are looking
Why
good.
are you sounding so bullish? What has changed? I mean, I'm excited that you're sounding bullish, but why are you sounding so bullish? What has changed in last 3-4 quarters, which is compelling a conservative management to come out with a bullish commentary?
I think the big change or turnaround has been the two big segments. So if you look at North America, which was 50% of our revenue, and BFS, which together is 30-40% of our revenue, both of them have swung around. So while they are still growing at a slightly lesser number than the company average, but the swing in their performance is where the confidence and the bullishness is coming from.
And just really at a big picture level, and digitization also has an element of artificial intelligence. It also has the element of data mining. If I look at what a Google, Amazon, Netflix and the others have to offer, they pretty much are saying the same language. We are doing artificial intelligence, we are doing data mining, we understand the customer. Are you reaching that level where you suddenly will start competing with the top 3-4 companies?
And I don't think so. I think, they are certainly, they have the tools, they have the cloud, they have the infrastructure. But then what they don't have, what big companies like TCS has, is the domain knowledge, contextual knowledge, and that combination is very important, right? So from our perspective, I think the artificial intelligence, machine learning libraries that one has, whether it is from Microsoft, whether it is from all the other players, and coupled with our Ignio platform, where we have invested very heavily on the artificial intelligence front, I think we are well positioned to leverage the automation for better outcomes.
Okay, so one 30-second answer and then we go to wrap because of compulsive factors. For years, IT companies follow trajectory. First half is stronger, second half things slow down. That time digital business was not there. This time digital business is there. So do you see some kind of a change in terms of the trajectory which you are likely to follow for FY19?
It's I think the trend seasonality will stay, irrespective of what, whether it is digital, whether it is this, and if it doesn't stay, it's even more acceptable and it's good for us. That will be icing on the cake.
Rajesh, normally when I wrap an interaction with you, I give you the choice of words: cautious, careful. But this time, I'm assuming that you're excited, and we'll wrap it with that, right? $100 billion, great work, guys. Thank you, and look forward to much more, engaging interactions going forward.
Thanks a lot.
Let's take a break. For the moment, it's back to the studio.
Nikunj for that, and clearly, as Nikunj said, a conservative management sounding optimistic and bullish, and that has clearly got reflected in prices. Though Street has not been so comfortable with the valuations, TCS has been defying all laws of gravity and moving higher, and that's what management has been talking to my colleague Nikunj about different verticals and how they see going forward. Quite bullish commentary from management over there. Let's move on to the broader market and take more ideas from our experts. And Dr. Nayan, I'm assuming that's more of buy calls coming from your end. Is it mid cap or large cap?
Well, it used to be a large cap, but that's got dropped down, and now it's in slightly demoted category. Bharat Electronics is what I'm talking about. Has seen better days, no doubt, in the past, but severe drubbing in recent time had brought the stock down. We had in earlier conversations mapped the low around 100, 103. It has revived from those levels. I had a call on this at about 108. I'm repeating the call again today at 113 because the stock seems to be, doing all the things that is expected of it. Continuing with the rising attempt, building up supports in terms of good volume as well as continued momentum. It's a slow mover, so therefore it continues to remain on my positional playlist rather than on the day trading list. So I am even now looking for a target at about 120, 122 currently trading under 12, 113 levels. Why the stop at 109?
BEL is a buy, it's a positional buy, so not an intraday. Kunal, decent move in some of the mid-cap names from lower levels, bouncing back. Difficult to point out whether these moves are for real or it's just a bounce back in line with the broader market. UPL, strong volumes, decent price action. What are you seeing on charts?
So yes, Siddharth, strong volumes. The stock managed to make a fresh short-term swing breakout, and the volumes push was one of the key factors for suggesting this as a buy. Also, I think the stock is quite distance below the 50 and the 200 moving average, and most of these stocks, the mid-cap stocks which are rallying, they are going through a process of mean reversion. So I believe that a similar process could happen for even UPL as well. I would suggest a buy. Targets of at least 655, stop loss at 624.
Srikanth, resistance of 10,800, 850 for Nifty is gone, and it has gone decisively, and now the earnings season has also started on a decent note with TCS surpassing what analysts were anticipating, and you just heard the commentary of management on our channel, and they are also very optimistic. What's your view on Nifty from technical front, and one more stock idea from your end?
Siddharth, like for Nifty, one thing is very clear that it is still into that corrective mode. It is corrective pattern. It is heading upward. It is heading upward gradually. There is like a lot of news flow which is like affecting to the market. But we are now in the result season, and we are going to focus and follow more on the domestic news flow. So today, if there is any lower opening or weak opening, then again the buying should emerge between the levels of 10,900, 10,850. I'm not expecting market to crack down immediately below these levels. At the same time, on the higher side, 11,000, 11,050 is going to act as a resistance, but broadly we are expecting 11,050, 11,100 as the next important level to watch out for. And while looking at the other stocks which are supporting to the market, they are really doing well. Like yesterday, Tata Steel was doing well, DLF was up. So those which are like weak stocks but having contribution in the in indices, they did well. Like Axis Bank also, it recovered very well. From
Srikanth,
the IT space specifically,
I'm sorry, but I'll have to let you go at that. Thanks very much for giving us your ideas. We need to quickly go across to our second high power panel from the TCS top brass. So, in conversation with my colleague Nikunj.
TCS, you're part of employees now. Official milna chahiye sab. With the management of TCS, it's $100 billion, and I'm just going to introduce the the top team once again. We've had a very engaging interaction with Rajesh and with EGS, but Ajoy is there, Ramki is here, and Prithvi joins us for the first time on 18 hours. So very warm welcome. Thank you for joining us.
Good morning.
Ramki, a tough quarter where wage hike was there and yet margins were good. The ambition remains 26 to 28. Is it achievable?
I think, as you rightly said, in this quarter, we had the 180 basis points impacted due to the normal increases which happens in Q1. But we were also able to recover about 70 basis points from the operational efficiencies. And that's been always a pattern. We do the increases in the first quarter, and then through the year we are able to use our levers. This time we have got this, and of course exchange has also helped. We look at it more from a holistic perspective. One, from the growth being better than in the last couple of years. We've always maintained that growth will give opportunities. Second, the scaling of digital definitely which is happening. It is getting embedded in almost all engagements, and it's not necessarily the big ticket large transformational programs, but across the board, across the segments and across industries, because of the various offerings which we have and the impact these digital technologies are making in the growth and transformation agendas of our customers. So once that is kicking in, that gives us opportunities. Three, of course, the large programs are kicked off well, and they will. We hope that they will pan out well. So I think from all these perspectives, barring any unforeseen developments, we should be still very much focused on that, and that's what our teams are all doing.
Ramki, over the years, we've been accustomed to talk about the margin band. But what has changed in last 12 months is the buyback. Because of buyback, if you're a minority shareholder, if you're an institutional investor, return ratios would change. So I want to understand what is the long-term plan for your return ratios? Where do you see a return on capital to settle down? Things will change. You start giving more cash back, return ratios will change. Yeah. What is the ambition on that?
See, I think we look at it as a more holistic shareholder returns. Today, of course, return on equity, etc., is around 34% or so. But looking at it from the buyback is also related to what we can do with the cash. If there is immediate no immediate requirement for the cash, and if we deploy it in the business, if we have enough opportunities to deploy it in the business, we'll continue to do so. No investment programs are put on the backbench. So it is from an overall shareholder returns is what.
No, I understand that completely. But my question to you is that you followed a pattern. We know how much you spend over the years. We know that the free cash which you generate, how much you have distributed in terms of dividend. But this time around, there are two buybacks which are at play, and these are large buybacks. These are not small buybacks. Yeah. The cash will come out, return on equity will improve. I'm sure you've done some internal numbers as to where do you think your return on equity will settle down. The reason I'm asking this question is because that's the way markets would look at it. I'm surprised no brokerages are talking about it today, but return on equity is a benchmark for P multiples. Right. So where do you see return on equity will move?
See, we'll take it as it comes. We are generating close to around 27,000 crores of free cash flow, and with the business and with the various drivers that continues. We'll also look at if there are inorganic opportunities, what it does, and we are focused on most of the free cash flow to be returned to shareholders, either in the form of dividends or this one. We'll look at we'll take it as it comes.
Fair point. Well, once again, a warm welcome on ET Now. Your vertical has been the so-called outperformer for the quarter gone by. What has changed in last 2 quarters? Why suddenly BFSI is making such a big comeback?
See, I won't call it a discontinuous break. It's a transformation, but slowly happening. We called out a couple of quarters ago also. Some of the banks in US have been more focused on their workforce and workplace transformation, more internally focused in revamping their strategy. We believe that they have completed their internal strategies, and there's a lot of focus on transformation agenda around how do I adopt cloud, how do I APify my internal systems, how do I strengthen my core. So there is a lot of transformation agenda back on the table, and we have our business 4.0 framework which helps them in leveraging these technologies much better. So we think there is a resonance of our offering to those banks.
Is this the beginning of a new cycle?
In Europe, see, I just want to be a little cautious here. Like, I don't want to say that it's a new growth cycle. Europe has always been on a growth path for us. The softness was primarily in North America. We believe that it is coming back to normal. I don't want to call a drumbeat saying that we are in a new growth cycle. I would say more it's coming back to normalcy.
But would you drumbeat that America is back?
America is showing signs.
So let's drumbeat there. Okay, great. It's a big market. So I just want to be very clear as to what we are communicating. 4 lakh employees, it's another milestone. Nobody is talking about it.
No, we did. Yesterday we said that, okay, we have talked about multiple milestones. Right, as far as this year is this particular quarter was concerned, 5 billion as far as total revenue.
Officially, press has stopped asking question on attrition.
That's
manageable,
so
right?
We are the industry leading.
It doesn't happen by magic.
So this one, and from a headcount point of view, 4 lakh plus, yes.
Of course, I've seen the number of the years go to as high as 14-15%, and then it's come down.
Of course,
so
yes.
Somewhere
around 15-16 also we have touched. So from there again back. So it's but over the last few quarters, I think over even last 2 years, if you see, we have been maintaining very well from a retention point of view. Attrition has been low, and it's not only in the IT side, it's in the BPS, it's overall. So it is across the globe. If you look at our total attrition, that's what it is at 11.7. So that is what we have been maintaining very well. So the people are pretty happy. They are getting the kind of opportunities that people want from the point of view of their own career growth, from the point of view of learning. And our focus has been in developing the talent base internally so that we are able to meet customer requirements. We are talking about business 4.0, we are talking about the digital technologies. So we are creating those kind of opportunities for our employees by giving them the facilities that they need to build and develop their competencies. And that's what is helping.
Exactly 18 months ago, a lot of IT companies, a lot of your counterparts, decided to reduce the workforce. TCS, look, we will not reduce them. We are the Tatas, and we will train our employees. Are you getting a sense that the challenge, which was a challenge for the IT industry or the IT sector per se in terms of rekindling, reskilling, reorganization talent, is that now behind everyone?
See, the industry is such where technology will change every 3 to 4 years, right? Now, the kind of change would depend. Like this time, the kind of change that we are going through, the digital wave, which is a major disruptor. So that is a major change. But continuous change is part of life. So everybody has to be continuously on the learning.
All right, that's the TCS top management talking about the growth path going forward. And I think squarely it boils down to what the BFSI vertical has done this quarter, that 3.7% growth in the BFSI segment just indicates that they're back not just in their bread and butter business, but also in the high growth segments like digital. So things are looking up from all quarters, and that's, I think, reflected largely in the way the margins have been defended at 25% this quarter around.